Welcome back to another episode of The Trenches. This is crypto's #1 live stream where we address the most important questions facing the industry. And again, the trenches are for everyone, including those who are building hardware and solving really, really hard problems. So I am absolutely thrilled to be talking about DePIN today. We have an incredible lineup of some of the largest, most notable DePIN projects out there and some of the best researchers who are covering this industry. Let's do a quick round of introductions, and then I want to set the stage with just some context, and then we'll jump into the actual questions and discussion. And I know we didn't really sync on this beforehand, so we're doing this live, but let's make this a little bit conversational. The goal is not to be like a podcast where it's 5-minute long form responses. Let's try to be a little bit more conversational as we go about things. That's totally okay in this format. But let's go quick round of introductions. I'm just going to do this in order of left to right on my screen. So let's start with Ryan.
Cool. Yeah. Thanks for having me on, man. I'm Ryan. I lead the Blockworks research team. We write research, alpha research for institutions. So if you are a liquid fund or a venture fund, that's our sweet spot.
Perfect. And how long have you been there?
A little over a year now.
A little over a year.
Just as long as I've been in the trenches. Yeah, I'm relatively new to crypto.
There we go. Yeah,
it's been a lot of fun.
I've been really impressed talking to Ryan how quickly he's gone from a macro trader to now knowing the ins and outs of crypto. It's really impressive. Thanks for joining us.
Appreciate it.
All right, next, Leo.
Yeah, thanks for having me on, Carl. I'm Leo, one of the co-founders of Peak, and Peak is a layer 1 blockchain for DePIN. And actually, we started building Peak before DePIN was a thing, and happy to share more about this later because there are real problems to be solved with DePIN, and it's not just a narrative that the space created.
What is that jersey you're wearing?
That's actually the collective. It's a creative consortia, basically forming, or like a DAO forming in the Peak ecosystem, creating content, creating events, and so on. So it's I really like the jersey.
Maybe
awesome.
Maybe DePIN needs to buy a soccer team, or a football team, as you would say. Maybe that solves all the problems we have.
Let's go.
All right.
Let's put some money.
Let's get Scott on. So I first met Scott, by the way, the first time. I think it was back in Dubai a couple months ago, and just really impressive. Love the conversation. And so I'm really glad we had a chance to meet there, because otherwise I don't think I'd be able to reach out to you and be able to have this conversation. So thanks for coming on, and I'm really glad we first got introduced there a couple months back.
Yeah, I know, it's funny for all the conferences and all the years are just finally colliding in person, especially in Dubai of all places. So yeah, great. Thanks for hosting and having me on. So Scott Sigel, I run things over at the Helium Foundation. Actually, I was brought in to start the foundation about almost 5 years ago at this point. And again, kind of think about your typical kind of setup, kind of stewarding the network, kind of helping drive things around ecosystem growth, community, partnerships and whatnot. Obviously, a very large focus on grants and investments into the ecosystem. So yeah, I think Helium, I would say, around certainly before DePIN was a thing in general, and I always feel like we were one of the first networks to think about that concept of consumerizing mining, which I feel like is the cornerstone of how you think about building these physical networks in a decentralized framework in general. So yeah, I've been building wireless networks for 5 years, started in the IoT, and obviously kind of hit our sweet spot in growth with everything that's happening on the mobile network now, with working with large carriers, with the likes of AT&T and Telefonica, as well as the Helium mobile native carrier that's running on the network. So excited to dive into all things Helium and DePIN today.
Terrific. And last, we're going to have Dylan. It's actually convenient. I'd say one of Helium's biggest fanboys. If you read some of his research, he is a big fanboy of Helium. So Dylan, welcome. Thank you for joining from ETHCC. How is France? What is the vibe like? And a quick intro on yourself.
Yeah, thanks for having me on. I guess I'll start with an intro. I'm Dylan. I'm a research analyst on the enterprise team at Messari. That's a bit similar to Blockworks. We do institutional research as well as research for protocols. I cover primarily DePIN, a few adjacent sectors as well, everything from tokenomics to individual protocol deep dives and valuations. I think Messari has been covering what I guess is DePIN today, probably for 5 or 6 years now. We used to call it Web3 protocols, kind of lumping in a lot of the earlier protocols like Helium and LivePeer and Filecoin with some other revenue-generating protocols. We eventually had another analyst named Sammy coined DePIN, and space has been growing since. And yeah, France is great. The weather is really nice. I think the energy is definitely high. There's a big Robinhood announcement today. Everyone's been talking about that with them building on Arbitrum. I think the Hood chain, also tokenized stock. So yeah, I think energy is good. It's a bit smaller conference than usual. It's in a bit more of a it's a smaller location in the south of France than what you'd see normally in crypto. But the vibes are good.
That's terrific. Yeah, internet capital markets are here. Though I will say I kind of hate that term. And maybe this is a hot take, but to me, we already have internet capital markets today. Like literally all these are taking place on the internet. I'd much prefer a term like on-chain capital markets or something else, but it seems like in crypto, once we get a bad name, we all stick with it. And so I think internet capital markets is the term for this cycle, just like RWA was, I'd say, the term for last cycle. All right, well, let's jump in. I want to set a little context here. So the reason we've been investing at Six Man Ventures in DePIN for a long time, we have a number of terrific teams that we've either directly invested in on the private side or purchased liquid positions into. And from my point of view, it's an industry I've been following very deeply. I have a background at Google Nest, so working in IoT. I have a hardware background, so absolutely love this industry. But what really set this off was a recent post thread that took place. So you guys should hopefully be able to see this. Mike is one of the partners at Six Man Ventures, one of the co-founders, talking about, hey, DePIN prices are down. And I don't think this is any surprise to anyone here, where, if I look at some of these, Helium is an example, the price is down. This is nothing specific to any team. It's an industry-wide thing. If I show you Honey, the price is down. If I show you the price of Peak, the price of Peak is down. I could keep going through every single major DePIN project. IONET is an example. Price is down, let's call it. A lot of these 50 to 100% reduction in price compared to where they were within the past year. And, obviously this becomes really important to foundations, and we're going to talk a little more about how these price impacts affect you. But it's kind of the tale of two cities where, I think Mike and myself have more of a view that it's a pretty exciting time where the fundamentals are improving, but yet prices are down. Similar to how in Solana, when it was trading at $35 for a long time, I was like, Mike, I feel like the fundamentals are improving, but the prices are down. Like, it just seems like it's a perfect arbitrage, opportunity. But, at the same time, Melton, who's another investor in the space that, we know and like, really says, hey, these things are, the tokenomics are way out of whack. They're cooked, and like there's no real moat in any of these decentralized industries. So two radically different views. And so I was like, we need to actually talk about what is going on with DePIN. Why are prices down? What's going on in the industry? And cover some of the really good things that I've seen coming out. So for example, in terms of like traction improving, Helium, I'm gonna go start work. Copy this. And it's weird, my paste button is not working. Anyways, Helium is now like creating like $23 million in data credits are being burned. So massive amounts of revenue. Hivemapper itself has partnerships with Universal, NBC Universal, with Lyft. Peak is recently listed on Kraken and now has 60 to 70 teams building in its ecosystem. So I just feel like we're at this really, really big inflection point. And I'm really excited to dive into it with you all. So maybe to start the conversation, let's look at, I want to talk about like the hardship of what's actually going on here. So prices are down. How does this actually affect your ability to run a business? Right? Because fundamentally, these tokens have value, which are used for grants, which are used to pay salaries. And, so in this unique environment, I actually want to understand what kind of challenges are made to hiring, to community, to financing, to operations in this more challenging token environment. And I'm curious, whoever wants to jump in can get us started.
Yeah, I mean, I guess I don't mind kind of kicking things off of like, obviously, like I think at least on the foundation side, we've always kind of run a relatively lean team in general, and I think that it just becomes, it's just like a lot of my background's in traditional venture, so it just comes down to the usual kind of triage of like, what is the really most important thing that we need to be doing right now? Where is going to be, um, the best way to kind of leverage existing capital right now? And for us, it comes down to the fact that it's interesting for Helium is that in our early days, we really it was massive growth on the supply side, and we had a lot of that pressure to kind of people were out there looking for hotspots, getting them on eBay. It was like the middle of COVID, but not to get too down that side of the story. But IoT separate from crypto is just a very fragmented industry, and I think anybody who's kind of worked in that space, unless you're kind of doing something that is like a completely vertically integrated product, like the things like Nest, for example, where you're kind of creating that very simplified, rich user experience.
Mm-hmm.
A lot of enterprise IoT is very fragmented, which is why I think we had a little bit of a demand side problem initially. Whereas now we have really unlocked something very special that I think the traditional telcos understand pretty quickly right out of the gate. Barring the economics, they understand very, very quickly that you're bringing something that solves a major capex problem for them. So for us to decide, look, let's use, for us to double down on grants and supporting coverage growth and to spend the money and the time with deployers, creating additional incentives to actually meet where the demand is right now. Again, I think a lot of the stuff when you're in a little bit of a constrained environment around spend, you're thinking about where are I going to get the most bang for buck? What is going to unlock growth for us the most right now? So that's where a lot of what we just think about where's time best spent right now. Is certainly around that side. Obviously, you want to make sure we continue to think about things in terms of supporting, token liquidity is always going to be important for us, and making sure we can think about that both from a centralized and decentralized side. But I think it's just, again, like what's the biggest priority right now? We've unlocked what feels like the sweet spot on demand, so let's spend that money supporting our supply side right now. Could certainly go on, but
So what is that? What
look,
does that mean exactly? And then I'd love to get your take afterwards, or Ryan, what you're seeing. But like, when you say that we're using it to unlock the supply side, is it basically, hey, when in these situations where, again, deployer, the beautiful thing about Deep is that you can have independent businesses run on these networks. People that are deployers saying, hey, I'm going to cover a geography that I know better than anyone, and so I know where to put these things. I have the right relationships. I can monitor them. But I imagine for deployers, it's pretty tough when you're, I mean, unless you're using a burn mint equilibrium where you're now just getting a lot more tokens for the same amount of support. Like, how are the deployers doing in this environment, and what does the challenges make when there's such volatility in the price?
Yeah, I mean, obviously, it's something that we are. We can't control the markets. So the reality is, if we know that with different relationships with some of these offload partners, that there is a specific geographic priority right now, let's that's where the right place is to spend those grant dollars right now. If we know there's deployments in Mexico, we know there are certain carriers in the United States with the U.S. offload partners, with again the likes of AT&T and the several others that are using Helium. That's a place where Foundation can step in to say, look, I mean, we announced a massive grant not too long ago with the idea of, look, like where the token prices right now, the protocol rewards are not doing enough of what it needs to do to kind of incentivize that growth. So where can Foundation step in to say, we've got that capital and let's support that, because we believe, and again, I'll let anybody, again, not financial advice, go read one of Dylan's reports and kind of what the appropriate value is for HNT, but it's how do we bootstrap towards a place where it is more economically viable and kind of sound for every single deployer. So where we can basically provide that grant capital to deployers that are out evangelizing, they're helping with installs, adding coverage there, and we know that eventually, like, those protocol rewards are going to end up supporting with enough data running through the network as well. I mean, like, you can call proof of coverage rewards a mechanism, but ultimately we think about this in terms of how much data flows to the network, and that's only kind of going up from here with where we're seeing that coverage getting built up and getting used.
Got it. And by the way, none of this is financial advice.
No.
None of this is an endorsement of the Trenches token. I hope you subscribe to the X to make sure you get all the latest information. But none of this is financial advice or a endorsement of any of the tokens that we may talk about or hold on this show. Okay, I guess Leo, when you're working with team, like you're trying to grow an ecosystem, right? Like the unique thing is, Helium is I'll say the OG, the juggernaut in the room that everyone knows when they talk about DePIN, the kind of best example or the largest example. You're now trying to create a whole bunch of Heliums. Maybe not Helium specifically, but saying, hey, I'm building an ecosystem out. So in this environment, how are the builders in your community feeling, just given that prices are down across the board? And does this affect your ability to give grants effectively and create the right financial incentives for Peak to succeed? Like, what are some of the challenges that you're seeing? And I don't know, is there any opportunities with the prices so low that people are actually excited about?
Yeah, I think in terms of also the opportunity, no financial advice, of course. So I think the beauty about DePIN is that the investors that are actually investing in DePIN really see the long-term value that is being created and see the fundamentals that are actually, rare in the space. Usually when you have a narrative in this industry, it's hot for a certain period of time. And then once the narrative is gone, potentially the investment opportunity is gone. And I feel like a lot of the investors that invest in DePIN actually understand fundamentally that those are decacorn opportunities or even $100 billion opportunities in the making. And I think the best investors in the space also currently recognize that, as you said earlier, fundamentals are getting stronger while the prices are down because sentiment and narrative is focused on other parts of the space. And yeah, I think many actually recognize the massive opportunity right now. So rounds in the ecosystem are filling up. Like we manage to support ecosystem projects in closing rounds. There are multiple ecosystem investors which continuously deploy capital, giving out grants. We have a grant structure which is a bit more long-term planned and not so dependent on the market swings. I mean, it can go down in a quarter and up again the next quarter. Like we never know what's happening, but like we try to plan as stable as possible so that we don't have to do massive fluctuations based on where the market is. And what we also see more and more is real government interest. We recently announced the machine economy free zone in the UAE, where we work together with the UAE government and stakeholders there to really deploy DePINs on scale and to allow citizens to deploy infrastructure, become prosumers, and they see how this is also creating critical infrastructure for the future, right? Because with DePIN you can generate data sets that you cannot generate in a centralized way, or it would be much more expensive, right? Much more capital intense. So smart governments see the opportunity, and there are more governments actually that are starting to get FOMO and want to get involved and just see like, okay, hey, in order to have future-proof smart cities, we need to engage with DePIN. So yeah, I feel like on the fundamental side of DePIN really gives it a lot of strength. And even though it's tough, of course, psychologically to see a token go down and people have negative sentiment, we know it in the space, right? People are brutal on X and Discord and everywhere. But yeah, like we're not worried because we just see fundamentally it makes so much sense. And yeah, I feel like many others are recognizing this too.
Like a lot of the long-term thinkers realize this too shall pass, and there's still a lot of opportunity. Yes. And I do think it's funny when I look at the biggest blockchain validations, the Solanas, the others. Like I think there's actually a lot of opportunity here for good financial management. And by the way, I have zero strategy on what Helium or Peak do, so I'm not saying this is or is not you, but like I look at some of these foundations, they ride their token all the way up and they ride it all the way down, potentially with doing row hedges or anything. And I imagine just prudent financial distribution. For example, maybe not burning a bunch of tokens when the price is low relative to when it's high. Like very simple things I imagine can allow foundations to emerge much stronger and even just be durable throughout these seasons. Maybe Ryan and Dylan, what's your points of view? I mean, you're seeing this from an analyst level. We're hearing that things are getting better. Like the fundamentals are improving. I'm sure you guys talk to liquid funds as part of the research you do. What's the sentiment right now in DePIN, and what do you expect is going to be some of the catalysts that help shift both the narrative, but also just continue to increase the fundamentals?
Yeah, I can jump in. I think if you talk to investors, there's a lot of confusion about DePIN. So some will be like, oh, like it's not generating any revenue yet. Others will be like, yeah, you could take like Helium, for example, like, is this an IoT network? Like what's the tokenomics? Like I heard they're not, generating revenue yet. Like I'm very confused about where Helium's at. It's been around since 2019. I think there's just a lot of broad confusion in the markets. We are starting to see a lot of revenue fundamental growth. But I think it's very early. I think we're just starting to see, DePIN eclipse 50, 100 million, maybe a lot more in revenue with more private DePINs that haven't launched a token yet. I think people are really just waiting. Like last year, we saw a lot of excitement about DePIN, a lot of early stage new DePINs emerging, a lot of fundraisers. This year, seen far fewer rounds. You see much larger rounds. I think a lot of DePINs are really scaling. They're trying to do sales on the enterprise side. They're trying to, just really find product market fit. That takes a bit of time. We are seeing progress, but I think the market is slow to recognize it. There's also a lot of confusion about what does revenue mean, like what is real value accrual on chain. That I think a lot of investors are a little wary about when looking at DePIN broadly. But I think there definitely are some core DePINs that have tokens that are generating revenue that are very high growth. There's also a whole lot of DePINs that are more private behind the scenes, haven't launched their token yet. I think we're going to see a lot of great news from them, over the next 6 to 12 months. Yeah, it's just a very confused market, and I think people aren't recognizing the fundamentals are starting to come in.
Yeah, I think, look, I've met a lot of investors, and I can say that whether we like to do this or not, they take price as a very meaningful signal. And that almost determine you see so many things across your desk, and you see price down tremendously, and it's very easy to dismiss that thing. I think my investing style is it's more conducive to this market. Like I live in the 52-week low list. I like much that's been like my bread and butter my entire career. And I think like surprisingly, there are a lot of value investors in crypto on the fundamental long side. I think like in their heart of hearts, they are looking for fundamentals, and fundamentals are finally coming to the market. I think DePIN is partially just it's a victim of the environment that it launched in. So we're going through this transitory period where the marginal dollar coming into crypto is sophisticated venture capital, is sophisticated capital and not like insane retail capital, right? Like sophisticated investor capital cares where the price is. They want to see, they don't want to see a huge gap between valuation and fundamentals. They understand payback periods. They understand relative valuation. They understand TradFi comps. You're getting that for the first time in the market. And now you're seeing these prices kind of like get to where they need to be for investors to like actually for an analyst to be able to take this to their investment committee and not be laughed out of the room for like a $50 billion valuation on Filecoin when it makes new revenue. Like you can't get that through, right? So, I think it was path dependency. Prices in 21 were crazy. 22, they, coming back to today, like you're really starting to see
I only
like
showed the chart starting at 2024. I didn't show
Totally.
the chart that shows the 2021 prices because we don't that was a unique ZERP era.
Right.
But you're right, even compared to that and then 2024, yeah, that was absolutely nuts. That's easy.
And it's like, you can't do anything about that. Right? Like the founders of these projects, they didn't ask for the market to take their token to this crazy valuation and then have to answer to customers saying like, why is your token down? I thought everything was okay.
Yep.
So, it's just going to take some time. But I think the most exciting thing for me is like thinking about the investor side. Like everyone forgets, I try to bring it up as much as I can, but like Bill Ackman was bull posting Helium in Q1 of 2022. And like Bill Ackman is like the most fundamental oriented investor like that you can point to in the market. He's from the tradition of Warren Buffett,
Yep.
right? And he sees the fundamental value in these things. So I think that when price corrects to where it should be, and you guys on the call with like your fundamentals clearly going in the right direction, you have a really interesting market environment ahead of you where like DePIN could be the first crypto subsector that gets meaningful TradFi investor attention, which I think is really
You
exciting.
think even
I mean,
more
I-
than DeFi?
Yeah, maybe I could be leaning too hard on personal anecdotes, but I think everyone they see the large traditional financial institutions, their names that they trust, and when you start adding trustlessness to these DeFi products, it's like who's on the other side of the trade, and it can make people feel a little uneasy. But like inverting the cost structure of telecom is potentially much more um, digestible to a TradFi investor. Like, we want financial institutions that adhere to borders and are very far away from, potential, wash trading and terrorist financing and things like that. Like pitching tornado cash to an investment committee is probably not going to go well.
Yep.
Whereas inverting the cost structure of telecom or adding software margins to telecommunications is really exciting.
Yeah, I feel like it's almost like there's a reconditioning in the market because, when you think about, what was crypto's real major use case? It was casino, it was the gambling, and it was that speculative premium you had on these things because it was not fundamentals focused. It was very kind of technical swing trading focused, and that's where DePIN doesn't shine because of the simple fact of it. It is a business that, you go talk to a traditional tech media telco analyst, and it's, oh, I get this. I can I can do a DCF model around this. I understand the peer group in traditional. I understand where you're reducing capex and not. Like, it is very easy to understand that, and it is a long-term durable asset for most of these things, whether it's wireless, compute, energy, where these things are not necessarily pure disruptor. They're very, very complementary to existing systems, and it's interesting. You look at kind of the retail or the more kind of crypto native fund investor from a few years ago versus, I go and I get in front of family offices right now, or more of these more traditional funds that I think kind of two different things. Like one is, you talk to a family office, like, oh, like this is exposure to utility. This is exposure to a hard physical asset. And, one of the realities of building in the physical asset space is it the most physical? They're the strongest network effects you could have. You could actually go, and I think NFX wrote some really great pieces on this years ago. I mean, more traditional, like kind of Web2 VC on what are the strongest network effects that are possible within venture, and physical is the strongest because you look at who are those incumbents right now and their customer retention versus their customer satisfaction. So, looking at the likes of like a Comcast where nobody is happy with their ISP or their wireless provider technically, but that churn rate is really very, very low. And that's just because of the ownership over that physical network. So the idea of, whether you're unseating it or that you're inserting yourself to take some of that addressable market, even at like 1% to 2% of the global addressable market, is massive. It's just a long road ahead there, but you're talking about a cash flow generating business with exposure to hard assets. And it's a reconditioning of that investor mindset of, rather than that speculative premium and the kind of wild swings where you might see that quicker dopamine hit in the near term upside, you're talking about a more mature, diversified mindset in investing of, fine, I can look at this kind of near term flash in the pan potential versus a long term durable asset with exposure to, those physical assets on the ground that are much stickier. So I think it's kind of a change in there where we're seeing that appetite from some of these other investors. I think the other bit that's a little bit difficult for DePIN, this is maybe getting a little bit in the weeds of, I think the people that I find that are very interested in the institutional side, they're looking for regulated products. Some of these very traditional buy-side investors kind of need those regulated products, but they're asking the questions. They're diving deeper. They want to know more about what's happening at Helium, at Render, at HiveMapper, because they understand where there is a clear customer on the other side there that is paying revenue. Again, you can talk to fundamentals. You can talk about that growth.
Yeah, there's kind of a couple of things I'm seeing here. Like one is that these are understood industries with clear incumbents, clear players. And unlike in DeFi, where let's say you're like, hey, I want to build a fundamental thesis on Aave, very quickly the mind shift could change to another DeFi platform, and you see an exit flow of liquidity versus, you're not going to see new incumbents in the telecom space come up overnight, right? It's sort of, there's the main structure and there's an opportunity to like it's an industry understood, relatively stable, competitive structure. It's also like it's almost not broken. Sorry, it's like the financial markets are these sophisticated actors understand them so well. They're like, there's nothing broken in the system. Like I can do everything I need to. They can get margin. They can do all these types of actions. But everyone knows like, yeah, ISP sucks, right? And so everyone's easy and able to understand, hey, there's an opportunity to out innovate here versus trying to compete against BlackRock is a very challenging thing to do. I think that makes a lot of sense. The one thing I will say as an investor on the prices going down is the only thing I see is it makes me ask, what don't I know? And by the way, we've seen this in tokens we've done private rounds for where we might happen to know what is taking place within the company that may not be completely public. And so we're at a lock during this point. So like we're not selling, but it's like, oh, I might know that somebody else is selling. I might know that there's somebody's about to leave the company. And so all of a sudden, when I see prices go down 30, 40, 50%, I immediately ask like, what don't I know? And I actually think that's why things like the disclosures framework that Blockworks introduced are going to be helpful, where, hey, you might understand if there's a massive unlock coming up or a massive event that as an investor, you can at least build a point of view around versus when I see price going down, sometimes I have no idea what it is. And it makes me a little bit nervous to get into that asset. So I'm like, what am I missing? I think one of the things, go ahead.
If I could just jump in on that quick. Yeah, I think the what don't I know is critical. And part of the reason why not enough capital is coming into crypto is just because there are too many. Like I can't type in HNT own on my Bloomberg terminal and see insider transactions, or like I can't click new token S1 and understand like what the cash flows are. It's really hard to dig for that information. So yeah, we're trying our best to solve that problem. I think we're going to like sub 12 months. I think disclosure in crypto is going to be very, very different.
Yep.
And then you can apply a better discount rate to these tokens. So like maybe tokens don't have to come in as much as they are because the discount rate goes from 40% to 15% or 80% to 10%, right? It looks a lot more normal.
Yep. I think we have to talk about revenue. I think revenue is, it's actually interesting. I found this tweet conversation interesting between, oh wait, is there not a different one? I might need to copy. On where it is not letting me paste links. Anyways, there is a long tweet thread between Hasib and Mert talking about revenue and how, Hasib's saying we're in a Hasib's one of the GPs at Dragonfly, saying we're in a revenue cycle and everyone cares about revenue, and pretty soon we're going to go back to growth and nobody cares about growth. And Bert was saying the opposite point, which was actually like revenue is always important. Like revenue is never not important. There might be periods where we care less about it, but it's still the best indicator of growth. And so I want to start with like quality of revenue, and maybe specifically like what is the right way to be measuring revenue in the DePIN space? Is it, hey, like, are we only counting revenue in the terms of what's going to the token? Because a lot of DePIN projects have a large amount of revenue going to the equity business. And so the actual revenue accrual to the token is not like substantial relative to that. Secondly is that revenue can be, let's say, deployed in different ways. It can be reinvested into the business. It can be burned per block as part of like a burn bin equilibrium. It could just be bulk burned, let's say monthly. I'm curious, is burn, like, how should we be thinking about revenue and the quality of revenue that these businesses are bringing in? And what is the right way we should be thinking about distributing that revenue to, let's say, give value, return value back to token?
Yeah, I can start here. I think the most verifiable way to track revenue is really just seeing it on chain. So it first has to be on chain. I think,
like, should we almost as investors like completely discount revenue that isn't on, like, for example, like people tell me Grass is doing $10 million a year revenue. I'm like, I have no idea. Maybe they are, maybe they aren't, but it makes it almost impossible for me as an investor to underwrite that if I really have no on-chain or at least verifiable way to verify that the revenue is taking place.
Yeah, I don't know if we should fully discount what protocols say. I think like we have to take it with a grain of salt if it's not on chain. Um, I think like the easiest way right now, because I think a big problem in DePIN is you collect revenue off chain. You have like a foundation, they're doing enterprise sales, selling data or whatever service the DePIN's producing, and then they go ahead and burn that revenue on chain through they buy back the token and burn it, or just do a buyback program. Um, like we don't even know what the full revenue is off chain. We just assume like they're burning the right amount of revenue. So like even there, we don't have full transparency. And I think like investors can really only go off of what they're seeing on chain. Like if it's a reputable team that has a lot of stake, that's raised a lot of money from credible VCs, you probably give a bit more credence to what they're saying. But again, like it's not audited. It's just, you get like, it's just what they're saying. So I think like most investors that are a little wary of DePIN, it's really just, it's not on chain. It's not verifiable, both on, what is the foundation doing? And then also like if they don't put it on chain at all.
So
I think like
0.1 revenue on chain.
Yeah, 0.1's revenue on chain. I think like that's actually where things are becoming interesting, is that prices are collapsing while revenue is increasing. And there's certain dashboards online you can go to and you'll see pretty significant revenue growth. Again, mostly alleged, not like verifiable. But that's, I think, creating an opportunity for a fundamental investor where
A location like this, DePIN Pulse.
Yeah,
Right?
exactly.
Is this still the
They don't
best?
give you all the
Is this still the best one? Do we think like there? I know there used to be DePIN Ninja, and I think that was sold, or that's no longer live. Is this like the best one that people are using nowadays?
Yeah, DePIN Ninja was consolidated into this one with a few other
Okay.
dashboards. So this is really one of the only high quality DePIN dashboards we have right now. I think for most protocols, you have to go right to Dune if they have on-chain revenue. Otherwise, it's really just here. So this is really what a lot of investors are going off of. And understandably, it's not like the most inspiring in terms of confidence. There's all these disclaimers, like a lot of it's unverified. And I think like it is holding back the space. Like we do need verifiability. And like I don't know if it's the number one priority for DePIN. Like I think it really is just actually building revenue versus like trying to audit it. But I do think investors are also wary to invest in things that they don't understand and can't verify.
What are some other thoughts on revenue?
Yeah, I have. We all have strong opinions.
Many.
Great.
Yes.
This is. I was kind of waiting for the revenue portion. This is where it gets really interesting.
I think you have to take it on a case by case basis. I don't like, and I even hate bucketing DePIN all into one category. I think there's like a quality of team perspective where like the lower quality teams are just like absolutely lying about what revenue is. Like if fees flow through the system, but not to the token or even not to the equity, they're somehow calling it revenue. And I like then I discount your revenue to zero, and I probably never look at your revenue again. There's some that are masking it as I don't know when annual recurring revenue changed to annualized revenue rate. But I prefer the old definition. And when people like start to mess with those two, like I take a second look, or I'll do a head fake and probably never look again. I think one of the things like I think a lot of investors really index on are logos. So like I've never seen like a growth stage deck that didn't focus on logos. And I think the interesting thing about public logos is that it's hard to lie about that stuff, right? Like when Hivemapper says Universal's our client, and if they're not their client, then Universal probably puts out a press or like addresses that, right?
Yep.
Like, so I like to see like, and again, it depends on the project, but I like to see actual logos. I think that there's two things that you have to keep in mind when looking at DePIN revenues, especially for new projects, is that they're mostly B2B. Those are longer sales cycles. So the token hits the market, and it's not a DEX, right? So you don't start seeing fees immediately. Like degens aren't just like aping into your product. You might have an 18-month sales cycle. right? So you have to like keep that in mind, I think. And then the other thing is like we still don't have regulatory clarity. So it's objectively still early days. Like some folks just aren't going to move, given the regulatory uncertainty in crypto markets. Now, like in 12 months, that might be totally different. But given that these are B2B businesses and that there's still a regulatory overhang, it's important to keep that like context in mind. You shouldn't be seeing massive fees on day one. It just doesn't make sense.
Yeah, I also add on the logos because it is B2B sales. Like a lot of these are trials, so like you'll announce a big logo, but you don't really know if it's a big deal, generating a bunch of revenue for the protocol. So you just don't have much insight about how, to what extent the relationship is at this point, and it's probably safer to assume it's a trial rather than a multi-year deal. It's going to bring in millions in revenue.
Is that true though? Like, I would like if a DePIN says we have a customer and this is the customer, and the customer is actually just trialing that. Like, you would think that they would do their best to remove that public association.
I think there's a lot of pilots. Like we see it, like even, I mean, we see this all the time on the private side where somebody says, oh, we're partnering with a company. And then you ping the company and like, oh yeah, like we're trying them out for 2 weeks and we'll see how it goes. So I think it's a matter of like there's probably a lot of lower effort pilots that internal stakeholders at these companies are validating the thesis. And it's unclear how and when that will convert to a much, much larger part of their product pipeline, their financial pipeline, operational pipeline.
Yeah, I think, it's interesting talking about token transparency a little bit earlier. Like, we're actually all like pretty in a privileged position where we can reach out to the founder and like we all have good knowledge of the space and we can figure out what partnerships are not partnerships. Like, you'll see like a no-name startup announcing a partnership with Google Cloud, and it's like they just signed a contract to use Google Cloud.
They're just using their infrastructure.
They're just using the cloud. So yeah, it all depends on the type of investor you are. Like, retail might not have that visibility.
Yep. How do the speaking of founders, how do the founders think about revenue?
Scott, feel free to go ahead first.
I mean, I can't proclaim to be the founder in this case. That's Amir can speak.
Builders. Maybe I'll say builders specifically. The operators.
Yeah. Nuance difference there, but I mean, no, look, revenue is something that obviously I go back, to what Dylan was saying. The more you can bring this on chain, the more transparency around that process in general, the better. Obviously, there is that added complexity, the fact of a lot of these enterprise, a lot of these larger clients aren't going to touch the token, so you do have some operating company that's in there that is actually facilitating that ability of kind of taking in cash, kind of buying and burning tokens, respective of those agreements. How much of that is kind of transparent and kind of shared? Again, like, I think we've kind of tried to learn from lessons past, at least in Helium side. I think that
how do we think of, because I mean, I was reading Dylan's piece and he was talking about how you guys are doing 20 to 30 million plus in ARR, and it's like you're burning tons of data credits. But then this website, which is right now the best we have, is you're doing 4, and like I think you're doing a lot more than 4. So what does that mean? Like what's going on here? And some of these, it's your point. I can go to you, Scott, and say, hey, what's the actual revenue look like, and we can have this conversation. But to people that might be independently exploring, they're like, well, why would I buy Helium if it's only got $4 million? But this must not be true. So how does some of these discrepancies happen on the revenue side?
Because I think of a lot of it's this nuanced difference of kind of like the enterprise value for the venture-backed companies versus how much of that is coming on chain. And that's, again, Amir has mentioned this now publicly of we are trying to understand how do you kind of simplify that exposure model such that more of that value very clearly is coming on chain, as opposed to what is that enterprise value that's accruing to Delta Labs, where we want to make sure as an ecosystem that's passed along to token holders. How do you kind of extract more of the Helium revenue into the token? How do we make sure that a lot of the stuff that's happening through offload, all is kind of a lot more direct and more transparently seen as revenue on chain? So yeah, when we're kind of talking about some of those larger numbers, that's a lot of the work that kind of Nova's doing, kind of to create the enterprise value. But there is, I would say, kind of directional momentum and a willingness and a desire. And, we've already seen a couple teams starting to take lead on this of how do you simplify that exposure model where you can kind of consolidate both the kind of equity side versus the token and bring more of that revenue very clearly and transparently on chain. Because again, the whole idea is if that value accrues a lot more to token holders, the networks just become all the more durable over time. The investment model becomes clear, and then again, all of this kind of flowing back towards that supply side of maintain the network is just critically important. So yeah, a lot of those larger numbers reflect a little bit more of enterprise value, just to be completely candid. But the fact is, there's the idea and the goal between, I think, all the kind of aligned organizations of bringing that value very much on chain.
Yeah, it's an interesting model where, it's something where should the value accrue to the equity or to the token? And it's almost like I would never try to token. It's almost like I could never prescribe the answer. But to me, it's like if all the revenue flowed to the token, but then the foundation said, hey, we need to give out every month X% to fund a labs that builds and does stuff. Like, to me, then at least all of it is going into the token ecosystem. Or likewise, if it's all going to an equity ecosystem, then there's no promises of revenue to the token. But I think the hardest place to operate is in DePIN, where you have an equity company that's accruing revenue and you have a token that's trying to accrue revenue. And I mean, they're kind of in competition with each other, where hey, where am I going to route this? I mean, Jito is in the same situation. I think 50% of Jito goes to the equity labs, 50% goes to the token. They said, I think Multicoin wrote a report that said, hey, if we switch this, you literally double the price of the token just by routing the revenue to the token. So Leo, what do you think about this?
Yeah, I think that's one of the core issues actually that DePIN has, right? Because also other spaces, other parts of the industry. But I think first step, really bringing all the revenue on chain and making it transparent, right? Like having an on-chain treasury, just like any L1, L2 has. So I think that's the first step, because then you can manage the treasury transparently on chain. And ultimately, of course, you can still, you don't need to use all the revenue to burn tokens. You can also use 10, 20% or so to pay operations, but at least this is transparently happening on chain. And at some point there can be on-chain voting and governance, right? Where token holders co-decide and say, hey, yes, we're going to use 50% this month to burn. The other 50% goes into investing into growth. And then even other companies can become service entities of that DePIN, right? So you can really start the process of decentralizing it further and further. And I think that's super crucial. And ultimately, of course, if you have a token, you raise with that token, and you have stakeholders, like you have investors, retail investors, and professional investors. Like that needs to be the focus of where the value goes. Because if you build up an equity story on the side, there's also less trust in the whole setup. Because what if at some point you get a good offer to sell the equity, and then suddenly the founders go and make 100 million exit on the equity, and what happens to the token, right? Like the company that buys the equity is maybe
they
not
may
that
not
interested.
prioritize the token.
Exactly. So I think that's super
One
important.
thing I wanted to add is sometimes often it's much more easy to accrue profit and value from leveraging a DePIN than the network itself accrues value. So I think we're kind of seeing this with Helium, where the Helium networks like carrier offload, the actual data credits being burned on chain is much less than the revenue being generated by Nova Labs. So I think that like brings a lot of questions, like the founding team or the labs team or any team that's leveraging a DePIN, like are they going to align with token holders? I think we see a lot of protocols where the team just decides it's much more valuable not to do that, and then that leaves a DePIN hanging. And I think the flip side is if you do align it, just given crypto's nature, I think you can get a lot more price action, a lot more growth by having these very massive sums of revenue. But of course, you have a lower percentage ownership. So that's the trade-off.
Yeah, it's kind of like if more than 50% of the revenue is going to a centralized entity, it's hard for me to justify how it's a DePIN network. I think it's this great centralized network that has a token for community engagement, sure, but like not in DePIN, I think, in the centralized way that we all think it could be. All right, well, we're almost out of time, which is wild. I can't believe how quickly this goes, but I want to start wrapping us. And I think to do that, let's go back to the initial post that set it off, which was, most of DePIN is cooked and they have no useful tokenomics. I guess maybe whoever wants to start is like, what is the case for DePIN at this point? Why is DePIN not cooked? And something that everyone in crypto should be paying more attention to.
Yeah, I can start. I think there's 3 reasons. One is tokens. They incent a cost advantage. They invert capital structures. 2, they can incent a product advantage with a community that can do things that a centralized entity cannot. So the product, you can actually go to market with a cost and product advantage. And then 3, the tokens are where they need to be now, or they're getting there, right? Like the prices are starting to look interesting. The market's correcting. There are plenty of, you can find in, 2003, 2004, you can find similar negative headlines about the .coms, right? And that was a perfect time. Perhaps that this is a DePIN's .com moment.
Perfect.
Yeah,
I think that
maybe going next on the token side. I think as we just discussed that.
Yeah, let's go Leo, and then Scott.
Sorry, Scott. I think there was a delay. Yeah, so I think on the token side, as we just discussed, we see there are issues, but they can be fixed, right? Like there are solutions, and I think within a year, the good teams, the strong teams will adjust and will fix the tokenomics, and new teams will have healthy tokenomics from the get-go. I mean, adding to what you just said, I think additionally, like solving problems that cannot be solved without DePIN, and just really quickly, energy, I think, is the biggest one. We can have renewable energy systems already. We have all the batteries, we have all the solar panels. They are there, just they lack the system that allows them to trade peer-to-peer, and that brings all the data online. So DePIN is actually able to solve problems that you cannot solve without DePIN. So there's no doubt that DePIN will be there and builds modes that you cannot build on Web 2.
Yeah, I would say that a few things is that number one, I am spending a lot of time in DC lately. Number one, I think that we're getting closer towards regulatory clarity, and there's a little more alignment around it. And I think DePIN is like probably the best narrative for crypto as kind of a more of a nonpartisan issue, because you're talking about networks that are focused on utility and kind of benefits that is, kind of a commercial but municipal level as well. So I think that narrative really, I'm hearing from people who have been very, very skeptical, where they understand the value of this and want to see where it plays a role, within on national communications and disaster relief. So I think that conversation is like one reason to be an optimist there. 2 is the fact that, again, to the other point, like, token issues being addressed. I think that there is a willingness on a number of teams here included on how do we make sure there is a pathway towards more value accrual on chain. And we're going to figure out how to get there. I mean, the reality is that the more you can have that on-chain revenue represented in a transparent way, it's just going to represent the network much better. And I think that, again, the good teams have an eye towards fixing that. Anecdotally, to me, like, the evidence is really in the partnership discussions at an executive and even board level leadership. And I'm talking specifically around telco. Some of the largest players, US, Europe, Southeast Asia, where it clicks honestly faster on that side sometimes than with the investor discussions of this is solving a massive CapEx problem. It is a huge scalability issue for us. How do we get started yesterday? Because they understand, and part of it is just, and this is true for any DePIN, like that durability, that ability to kind of establish that physical network that is shown the redundancy and resiliency can be solved through these types of networks is unbelievably useful to these kind of larger incumbent enterprise players. So how I see that kind of traction on kind of a partnership BD side and how much of it is really starting to take off right now. Again, I think that's where we just need to make sure this is represented in the market appropriately. But like the demand side pressure that's happening now across a number of like really solid DePINs is just evidence that the good teams who are building stuff that is really creating value, like those are, I'd say, long-term durable, without a doubt, and the value is coming.
Terrific. All right, Dylan, you want to help close us out here on the case for DePIN?
Yeah, I mean, I think my tweet responding to the original one was that DePIN is on discount. And I think I truly believe that. Like, we're seeing established DePINs like Helium generating tons of revenue, very high growth. yeah, I think we saw the president say he had a problem with AT&T connection on a live call, and told the CEO of AT&T to fix it. Amir responded that the CEO is literally working with Helium to help solve coverage problems. So we're getting major institutions that need DePIN, big companies. I think governments are starting to look at DePIN across the world. And I think we're going to see a lot of high growth going forward, even more on the private side, pre-token. I think I saw Pipe, which is a CDN on Solana. They're doing like $1 million in revenue in the last week. I don't know what that'd be annualized. I don't know the nature of that, but I think we're going to see a lot of DePINs like that start to emerge once they, start revealing revenue. So I think things are looking very bright, and I think DePIN's on discount.
DePIN's on discount. All right. Yeah. Thank you so much for this conversation, guys. We barely scratched the surface. I had so many more questions. We didn't even talk about single token versus dual token. We didn't talk about how to value these properly. Like, I would love to run it back sometime if y'all want, but this has been a great conversation on DePIN. There's a lot to unpack here. As investors that are listening, not financial advice, do your research, dig into the data. I do think there's a lot of opportunity and bright spots for DePIN ahead. But my personal take is we could go down more before we go up. But nonetheless, I think we're moving into a very bullish macro environment. I think with that, risk on assets are typically going to do well, with the highest quality assets sort of outperforming. So take that for what it is, not financial advice. And I'm going to keep buying DePIN assets because I like them, and I think it's going to be a big growth story over the next couple of years. Thanks, everyone. All right, have a great day.
Thanks for hosting.
Thanks for having us.
Yep.